Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Tuesday edition. Yes, Trivia Tuesday. I had all kinds of trivia questions set up, and I forgot them all downstairs. I think I was gonna throw a trivia question for our Tuesdays. Start things off with that, but today you're gonna have to wait. You're gonna have to do without me. So welcome, everybody. Hope you had a great day. Alex sent in a couple of good questions regarding metals, and so I wanted to kind of dive into the metal side of things because they've absolutely been on fire. Of course, I'm still bitter that I dumped all my silver. Well, actually, I didn't dump it. My silver was taken away because I sold calls against my positions, and I had thousands upon thousands of shares. Unfortunately, that will happen. So the big question is, what on earth is going on with the Metal Mania? So I'm going to leave that title there. I don't know if I spelled it right. Usually, is there an apostrophe between metal and S? I don't know. I always mess up on that one. But I titled today's show Metals Mania just because some of the metal prices have been absolutely ridiculous. And I'll show you some right here. This is the one that really is just the golden child of the metals markets right now, and that is silver. Absolutely parabolic. You are at all-time highs. Never been this high ever in the history of the price of silver. We are now approaching $61 per ounce, or we're at 61. I'll bring up a monthly here so we can see the long-term picture of silver, what's gone on. My price charts here go all the way back into 1970. I think is the first date I get. Hold on, I'm trying to get the first date here. April 1st of 1970 is the first price that I get for silver. Of course, in the 80s, you had the Hunt brothers, which was a fabled story in the price of silver. I had Warren Buffett a little bit after that, and now all of a sudden, we're finding silver at just astronomical levels. And really for the past 1, 2, 3, 4, 5, 6, 7 months straight. So most of this year, we've seen silver just continue to power forward, and the momentum surging significantly in the month of November and continuing on in December. Now, why is that? And we'll dive into some of the other metals here too. For example, here's the monthly of platinum. Platinum certainly nowhere near as pronounced, but it's been a phenomenal 2025 year. Here is palladium, which also has had a fantastic 2025. If you want, if you guys would like, let me know. And I can pull up calculations so you can see kind of what the monthly or the annual rates of return would be. Just let me know if you want to know the annual numbers. Copper, he's still doing okay, although it's had a lot of volatility here for the month of, for 2025. And then nickel, well, nickel's not that significant and just keeps drifting lower and lower and lower. Probably because we're getting rid of our nickels, aren't we? So let's go into silver, as Mr. Wolf says. Kind of crazy on silver. Gold, copper, platinum going up, but not like silver. Why? A lot of speculation as to why that might be. From my neophyte, novice perspective of metals, it's just utilization. Just so many products and services. Certainly when we started talking about alternative energy and photovoltaic solar collectors and stuff, I can't even think of the word. You have more silver used in that than you would gold, platinum, or palladium. And I know that I think palladium is used in catalytic converters, and those get stolen all the time. But the amount of silver usage is far greater. From what I'm reading, a lot of it has to do with shortages of inventory of silver as well. So if you look at the London Metals Exchange, one of the largest out there, they're showing their inventory is depleting very quickly, and so they don't have the supply. That class old, we're spinning, Big Ollie? I hope not. Mine looks good on my end. Yep. You're spinning because I just got an announcement saying you're not sending information. Hold on, I think I know what this might be. No, everything looks good on my end. That's weird. It's got to be a Google thing. Let me see if I refresh it. I have installed at all. YouTube is not receiving enough video to maintain smooth streaming. As such, viewers are all experienced buffering issues. Okay. Let me see if I can change the stream settings. Nope. A lot of times when I start the stream latency, I set it to ultra low latency so I can see your responses much faster. Maybe not Gremlins, Joe. Sometimes it's just the internet. My speed test is actually very good. So it's not my internet connection by any stretch. It's not my software either because everything's running fine right here. So this is probably in the upload to Google that this happens. Yeah, my speed is fine. Oh, bummer. Sorry about that. Well, hopefully it fixes itself soon. Yeah. Still says I have poor stream health. Next time what I'll do is I won't set the stream to ultra low latency. I'll keep it as standard. Fortunately, when I keep it at standard, folks, just so you know, there's like a 40-second delay between when I ask a question and I get a response. When I keep it on ultra low latency, it's like 5 seconds. So it's certainly a lot better for me to interact with you, but I've noticed that sometimes it does this, and it's also one of the things that Google talks about, which is now it says excellent healthy stream. So now it should be completely back to normal. Not sure what happened there, but there we go. Hey, Kevin, good to see you. All right, so I was going through kind of the justification as to why silver, and a lot of it has to, number one, I would say it's just demand for silver across a multitude of different products. It's probably one of the most in-demand metals at this moment in time. Also, you look at the second factor here, what has the Fed been doing? Well, we've had 2 rate cuts, and that generally makes the dollar weaker. The perception is that we're going to get another rate cut, and I will bring up the Fed funds futures right now for you guys to see. We have 20 hours, 52 minutes, and 4 seconds left until Jerome Powell makes his announcement. And there's an 87.6% chance that we're going to see that rate cut happen tomorrow. So that is pretty much locked in. Now, what should that do? Well, if you lower rates, let's go back to our charts here. If you go and lower rates, I'll bring up your yield curve for you. Yield curve. What should happen is this hard left-hand side of the yield curve, which right now sits at 4.106, should drop by 25 basis points. So as we start off, let's say Thursday morning's trading, this should now be down around 3.85, thus losing its yield and starts to drop. When that yield drops, that means that typically money is more available, cheaper money, more available, and that means that money comes into the market. So this would be a positive thing for the equity markets overall. But one of the bigger pieces here, especially as people are concerned that we're seeing rising unemployment and rising inflation potential, they run to precious metals. So you've got, number one is just supply of silver is dwindling. Number two, you have the yield interest rate is going to get cut tomorrow. And number three, when you have the interest rates getting cut, typically what that leads to is a weaker dollar. Now, it was kind of interesting today to see the dollar. This is monthly, but let me bring up the daily for you. I was kind of surprised to see this action today for the dollar index, the Dixie. You had a 0.14% increase, which certainly is not a huge move, but on a day right before an announcement where, for all intents and purposes, we're pretty certain we're going to see rates cut by 25 basis points, one would believe, or at least I would believe, that we would actually see this dollar index heading down, showing a weaker dollar, because you're basically creating less incentive for people to hold dollars. There's the carry trade. So let me explain that a little bit here. Let's go to, where is all my tabs? Forex Factory. If we go to, I believe, market, and if you scroll down on market, I think it shows up there. 1 second as I try to find it. They usually have a cool little table of all the rates. And here you can see right now the different rates. So the US is sitting at 4%, same with the British pound. You have Japan at less than 50 basis points, and you have the Swiss franc at 0. So essentially, if you bought USD CHF, Swiss franc, you would earn 4%, and you would be owing 0% if you held the Swiss franc. So therefore, you'd have a 4% yield on the carry trade. Well, if that drops to 3.75, as it most likely will tomorrow, what that means is that the British pound would probably start to see more buying activity, meaning the British pound would start to move up. Why? Because the British pound is still at 4%. So those who have the carry trade are going to try to get that extra 25 basis points by selling their dollar Swiss franc and buying the British pound Swiss franc, because they get an extra 25 basis points. And again, it's not like it's a lot of money, and for most of us it's insignificant, but when you're trading $1 billion at a time on a carry trade, now all of a sudden a quarter basis point adds up to a ton of money. So let's look at those charts here real quick. Let me go to our Forex tab. So here's your USD Swiss franc, right? We're seeing that one sell off a little bit, and that's what should be happening as people start to sell out of their dollar Swiss franc, and we should see, I don't have it on here, but let me go GBP CHF. So there's the British pound Swiss franc. And we should see this actually start to move up in the next 24 hours or 48 hours, because if the U.S. cuts, then that will cause people to sell dollars, buy British pounds, with the expectation that the pound will continue to have its 4% yield, and the U.S. is at 3.75. So that's another factor to it. Remember, when the dollar gets weaker, which is what this would most likely do to the U.S. dollar, if the dollar gets weaker, then that means more money coming into the markets. That means bigger moves up for the equity markets, and also more money pouring into metals. And he says, why is there no fear regarding Swiss franc like the yen carry trade? It's a good question. I don't know. I'm not an FX expert, Andy. I trade FX every now and again on the futures markets, but not really my area of expertise. I think it has a bit to do with just the stability of Switzerland, period, right? The Swiss don't usually do anything radical, except for when they decided to unpeg their currency from gold a while back. You guys might remember that. For those of you who have been around a long time, you want to see one of the wildest moves ever. I think this is 2015. Let's go look at that Swiss franc. This is a long way back. It's funny. You'll notice it right away because you see these big waves that happen. Everything looks fine. And then there's one day where it just had an absolute... There it is right there. So it's 2015. This is in one day, folks. You had, 1,000 pip plus moves in the Swiss franc when they decided to unpeg it from gold. It was pegged to the price of gold for a while. So usually the Swiss franc, the Swiss government doesn't really do anything dramatic. They don't have any real wild swings on their currency. We can go out here and look historically if we go to the calendar. Let me just type in CHF here. Bear with me as I do a little bit of modification over here to find it for you. Let's go to none. I'm going to go to Swiss franc just so we can see. Let's get rid of the speeches. I just want to see their central bank pieces here so we can see what their rates have looked like. There it is. You notice that even though there was a big bump right here, the Swiss really don't do much with their currency. It's pretty mellow as far as manipulation. Now, I know you're going to tell me, you're like, well, Japan doesn't do anything either. True, but I just feel like there's a little bit more confidence that the Swiss franc is a more stable currency. It's not as impacted by geopolitical stuff. I mean, the Swiss kind of just seem to be staying out of everyone's business. They just make chocolates and make knives and call it a day. Whereas you look at the Japanese yen, sorry, that might have been offensive to some people there. My apologies. I got to be so careful what I say nowadays. Let's go look at the Japanese yen, for example. Put on JPY. Their rate announcement was last week, I believe. Bam. And no, it was not last week. It was the week before. So we're going to continue to move backwards here. That's why I find when they had their rate announcement, theirs was always tentative, which is kind of annoying. But okay, here we go. Theirs is usually fairly consistent too. Not a lot of wild moves. And I would, the Swiss franc looking strong today. Japan make a sushi and games. Electronics and cars. Come on now. I would argue that the Japanese don't even make sushi anymore. It seems like it's all Americanized. California roll. I believe that the California roll was created in, if I'm not mistaken, someone can fact check this for me. The California roll, which arguably in the United States is probably the most common piece of sushi that you would eat, I believe was created in Vancouver, Canada, if I'm not mistaken. But anyway, it goes back to kind of the stability and just safety of it. I think Japan find themselves in a very interesting conundrum, if you will, of a monetary policy position. They're also on a pretty big path here to increase and keep raising and raising and raising, whereas look like the Swiss franc that we looked at is relatively safe. They had a little bit of a bump, but now they're back down to kind of their normal level right around zero. So those are also some of the parts of that pie that goes together and creates all the havoc. All right, let's go back to gold, because gold, for that matter, has been wild as well. Although we've noticed this little kind of condensing form that is posed here, this pennant formation. So, gold certainly great, but the rate of return is so much higher on silver. And again, I think that has to do with the overall demand for silver, its utilization, and supply dwindling. Now, I saw someone in the very beginning talking about, mine, baby, mine. Yeah, this might make sense to look at companies that are in that mining space. There's so many different names in my head. Freeport-McMoRan comes to the top of my mind, but that's not who I'm thinking of. There's a, what's the name of that company? John O'Donnell and I used to always talk about this company. They were a silver royalty company, and maybe buying some silver mining stocks right now would not be a bad idea, just because the profit margins are going to be surging for those guys because of just the price of silver. SLV keeps going higher and higher. Now, I think what was mentioned earlier is now's the time to sell silver. I don't know if I would say now is the time to sell silver. For my opinion, I think you need to wait for it to confirm that this trend is actually over. I mean, this daily time frame of silver is phenomenal. And if you notice the difference in emotion, right? If you look here, and when I'm zooming, I'm scrolling back to the huge rally that happened in the beginning of 2025. And you really talk about from August until October was just a beautiful rally. And those candles look relatively consistent. Some of them got a little bit larger. But notice the emotional difference here. And this, again, is just dissecting behavioral analysis. If you look at the candles from August through October, they were much larger than, let's say, the rally that happened back here, and more consistent. What really is wild for me is what happened after October. Once we had this little dip here in silver, now all of a sudden we're getting not only larger green candles, but we're getting breakaway and runaway candles, where it gaps up and just keeps on going. Gaps up, keeps on going. That's a sign of extreme demand. And yes, I am certain that all good things come to an end. Sorry, Oliver, here comes the gloom. But now probably is not the time. I mean, you had a day today for silver, which is one of the more bullish candles you will ever see. It opened near the dead low. So SLV opened today at 53.39. It hit a low of 53.36. So it literally fell 3 cents. And then it continued to rally and closed 2 cents off of its dead high, up almost 5% on the day. Massive demand. And you had the same candle happen on November 26th. The same candle happened on November 28th. I just feel like there is this euphoria, greed, if you will, and people literally stumbling over themselves to get a hold of their silver. So I know Alex is talking about having purchased a lot of silver. Good for you, my friend. At some point, you got to look back and say, Am I content with this? Do I like it at $54, considering it's never, ever, ever, ever been here before? I would peel some off the table. Not saying that this rally is done, but just peeling some off the table. If you look at the rate of return for the year, let's just go, I'll put an annual candle on here just so you guys can see what a 12-month candle looks like. Do you guys think that something looks odd here? I mean, this goes all the way, only goes out to 2006 on SLV. I can probably bring up silver futures. Let me see if I can get silver futures to go further back than this. Hold on one second. Bring up my futures. Oops, sorry, my metals. Where did my metals go? There they are. You know, you look at this chart. One of these kids is not like the other, right? Yeah, Pan American Silver is one of them. There's another one that's Pan American Silver was actually mining, not a royalty company. It's not Freeport-McMoRan. It's Franco-Nevada. Franco-Nevada is a big royalty company as well. I'll bring that chart up here in just a second. But man, you know, when you have parabolic moves like this, you typically get big sell-offs. And look in the past, all right? And again, Oliver, close your ears or go away for 30 seconds. Go away, Oliver. I don't need to hear it. But look at this candle for the year of 1979. Huge candle. I mean, percentage-wise, it might even be bigger than what we have today. But percentage-wise, from where the year closed the year before and where this one ended, you had a 373% move up in silver in 1979. It did continue for part of 1980, but then came crashing back down big time. And you see, typically when you have really big moves, this one here stretched in, this one was a long one. I mean, this went from 2009 all the way to the middle or some point in 2011. That was huge. That was 336. And now we are at a point where this rally really started, we'll just call it January of 2024, to where we are now, 156%. So we could still have a lot more percentage-wise to go. I'm just a little bit nervous when I see something that extended, right? And granted, I do think there are a lot more uses for silver today, and as we go into more solar panels and things like that, it may become more in demand. So let's see, Franco-Nevada, FNV. So this is another one, and look at their 12-month chart. This is a yearly chart, but I'm just going to show you the daily here. Franco-Nevada, big in the silver space. Not at all-time highs, but certainly had one heck of a year. The Avengers, Doomsday. I think they already did that movie, and it was terrible. That was Endgame. You know, if you feel that silver is going to continue to go up, and then you might want to look at something like Franco-Nevada or Pan American Silver. And there's many others out there. I'm not the silver expert, but Pan American Silver is actual mining, and you can tell that they are surging right now because, hey, if I'm Pan American Silver, you're working overtime. right? If I'm a silver mining company right now, I am like, okay, guys, your vacation just got canceled. You're pulling as much, so we're working overtime. Get me my Optimus robots to mine silver because I need 24-hour workers to get as much out of the ground as I can right now because the profit margins are huge. Great opportunity for these companies. Wolf says, on weekly, I could see silver getting back to 36 area on the SLV ETF. You know, it's tough to calculate these out, especially when you're, being very, I guess, speculative. How do I do that? Do I go from this low in 2025 in April to where we are today and do a fib retracement? That's what I would do. And that would put a 50% retracement right at $40. A 61.8 would be a confluence level at 37.50. So, that would certainly be a good spot. And even if it fell 23%, that still would just take us back to prices that we saw about 2 weeks ago. That's insane for silver. I do think there'll be a sell-off here, but again, if I'm someone who's holding silver, been holding silver for a long time, I probably would take some off the table and lock in some of that profit. I certainly wouldn't sell all of it, but when you have a parabolic move like this, usually you get a pullback that's equally as aggressive. What's it going to take? It's going to take people like Pan American Silver or other silver miners to flood the market with more and more silver, or some reason demand to decrease. Of course, we know electronics also use silver, and electronics right now in super demand. You don't own it if you don't have it. True, I don't own it, Joe. Actually, let me take that back. I do own silver. I have quite a bit of silver, but my silver is all actual physical silver. I've been collecting it for years. Silver and gold coins predominantly is what I have. But yeah, I don't own SLV or the silver futures. There's no other one in game with Thanos. Consider buying puts. Not a bad idea, Les. You could buy puts. Now, right now, your puts are probably going to be cheaper than normal because no one's looking to buy puts, right? The premium on those is going to be relatively small, or no one's selling it either. So I'm okay with potentially buying puts, but you have to take into consideration this trend. If you're buying puts on silver, I would be of the opinion that you have a higher probability of those puts expiring worthless, right? Depending on what your strike price is, and if you go too far out of the money, you're going to pay some hefty premium. But yeah, buying puts on silver could also be a good way to capitalize on this with a little bit of money, right? You're not using the full price item. You're just getting a leveraged position, and if it works out, you're great. If not, you'll just lose your premium. So there you go. Toby says, got a lot of cutlery. Nice. Watch out. Someone's going to go over raid your cutlery drawer. I mean, people are stealing copper wires because copper's gotten so expensive, and you're stealing copper wires because it's $5 a pound or $5 a. Yeah. Anyway, other ones. Obviously, we talked about Palladium. There's Palladium's chart. Nowhere near as strong as what we saw with silver, but still a great annual return. I'll go back to a monthly here just to look at the peak prices here. Palladium's way off its all-time highs. Its all-time high back in 2022. Hitting a high price of $3,425, and we're about half that right now. So way off that. Platinum looking better, but still way off its all-time highs. That was going back into 2008. But all in all, a decent year so far. Not huge, but silver is the one. So I think this is going to continue. To Alex's question, which was all about silver, I think you'll probably see that trend continue. It makes me a little bit nervous to see it as extended as it has been. I mean, every day a gap and go, starting at the bottom, finishing at all-time highs. That usually doesn't last very long, but enjoy it while you got it. If I had a bunch of it, and I would probably divest a little bit, a piece of that, and lock in on some of this rally here. But again, it all depends on what your goal and objective is with that silver, what your initial position. Andre says, gold is being driven by money investing more than jewelry or chips. Yes, it's driven by central banks as well, right? So when central banks are looking to stockpile gold, it's a sign that maybe they're getting a little bit nervous about where things are headed. And again, that's just classic collegiate textbook stuff, which is the flight to security is gold, period. Well, I think you're seeing it now kind of blend a little bit more into not just gold. You're looking at other metals as well, diversifying and hedging that portfolio by buying more and more. So I think this trend here is probably going to continue until it doesn't. If we look back, really what's happened this year, we've had one red candle, and that was June. And right now we have a red candle forming, but we've still got quite a bit of time before the end of this month. We've got, what is this, the 9th, so I've got quite a bit of time till this candle is finalized. And if the trend is any indication of what's going on, we'll probably break out on gold to the upside here. Here's your daily. If the trend is any indication, we'll probably break out to the upside and see this thing go higher. So I do think with the weakening dollar, the cutting of rates, that's going to continue to push precious metals and metals, period, to the upside. And I think it's also a sign of economic demand in specific sectors like technology. And there we go. There we go. When aluminum was high in 2011 and 12, someone stole a bunch of bleachers from Modesto. That's hilarious. I mean, it's horrible, but yeah, I mean, you get that stuff all the time. I hear all these stories about people just stealing wheels of copper and just stripping, going and taking down power lines and things like telecommunication lines because it's just got copper in it. It's just so bizarre. So bizarre. All right. So, Alex, congrats on your silver position. You've had it for a long time. Might want to just take a little off the table there. What else do I have here? I'm with Les. Wait until we see the change in the trend. The problem there, Les, if you're looking at silver and saying, I'm going to wait for the change and wait for it to commit, to rolling over and showing a sell-off, is by then the puts are going to start to look way more expensive, right? So as silver starts to fall, the premium for that is going to start to get more and more and more. Silver on a monthly looks like NVIDIA on a month. Yeah, it does, right? Wild. It's wild. There's no new product. They didn't create anything, but I think silver might be using some of those new products. Remember the catalytic converter theft during COVID? What do you mean during COVID? My friend is a police officer down here in Southern California and says that they're still getting tons of catalytic converters stolen. Unfortunately, one of the most common vehicles that they steal catalytic converters is, actually, do you guys know? The two most common vehicles that they're stealing catalytic converters out of, what are they? What brand and model are they? Surprisingly, there are a lot of these going on because the way that they're built is so easy. It's Toyota. Number one is the Prius, and number two is the Toyota Tacoma or 4Runner. Same basic thing, just super easy. Just take them out real quick. Can be done in just a few seconds. Wild. All right. What else we got? Let's go into our broader markets here now. We got has to be trucks, easy to crawl under. Yep, exactly. Tacoma, 4Runners, you got good clearance space. Prius, not so much. She was saying a lot of the thefts are on Priuses. I'm like, who has jacked up Prius? Maybe there's really small people stealing these catalytic converters, sliding under there. Starting at the bottom. Where do we go from here? Exactly. Well, hard to get under that one. Tundra, according to and Tundra for sure. Any Toyota truck. So 4Runner, Tacoma, Tundra, easy to get underneath those. Back to our top 8 markets. Silver. I'm silvered out. It's in my brain. It's cooked. Crude oil. Nothing special at all. And I've said this for the past month and a half. Pretty convenient channel in here. I know we got spread traders in the room, and I know Les is the Iron Condor King in the room now. Hey, this one's still looking pretty good, although the last 2 days do show a lot of weakness and pushing back down towards those lows. You still got a long way to go, so this might be still a great candidate for a spread trade on crude oil. It's down 1.07% today. That's coming off the heels of a even bigger loss yesterday, but overall, it looks like that trend, at least on the shorter term, is lower highs and higher lows, so more compression, staying within those 2 yellow boxes you see on your screen. So all in all, a great setup in my opinion. S&P 500. All right. This one was not that exciting today. I didn't see a lot of... Brandon says, do I trade options on futures? I do not. I do not trade options on futures. And I'm digressing here, Brandon, because it's a good question. And people are always like, well, why don't you, right? I don't have a problem with it. I really don't. You got to find what works for you, what fits your style best. And for me, I don't know. I just don't do it. I find my results are great with the way that I'm trading right now. And I want to stay with that system, stay with my strategy as it is because it's been performing really well. And I don't want to rock that boat, right? As long as I can beat the market, which is my overall trading goal for all the accounts combined, then I'm achieving my mission. And I don't want to rock the boat. Could I use the leverage of options on top of the leverage on futures? Yes. And there are some people that do it, but I don't know. Not for me. Not for me. All right. Great question, though, Brandon. All right. Let's see. I was at the S&P 500. We were down 0.1%. I don't really like the way this transpired today. So, we've been on this kind of sideways piece here for the past 6-7 days. And you can see these small little bottoming tails that have formed almost every single day. Feels like kind of a compressed range, especially after we had these 4 or 5 really big green candles in a row on the S&P, and now it's just kind of consolidating. It almost feels like that crude oil chart where we're stuck between these 2 yellow zones, even though this bottom one really isn't a demand zone. It's just a legacy zone I have there, but I'll take it out. It really feels like we're struggling to get above this swing high, which is between 68.74 and 6,900. So you got about a 26-point range there. We did break above it on Friday of last week. Then today, the first 2 days of this trading week, just showing some weakness out of it. So I agree with Steven here. He says it looks like it wants to sell off. It feels the way the 2 candles have formed here today that, yeah, it does feel some weakness. But remember, you can't do anything until after that announcement because we just don't know which way it's going to go. If Jerome Powell says we're cutting 25 basis points, you'll probably see initially the markets react and so a nice little up move. But be careful because 30 minutes after that, when he makes his announcement or does his press conference, you'll get a good clue as to what may happen at the next couple of meetings or what the outlook is for 2026. In that case, this thing can change very, 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 very quickly. So, my advice on a Fed day is always leave it alone until after the press conference because during that press conference, one word could cause this market to go absolutely haywire if he says something incorrectly or says something he shouldn't have or doesn't say anything at all. So it does feel like it's rolling over. It feels like it's getting really slow. Eric Option says, our equity is dead because of tomorrow's rate cut announcement. Yes. Typically what you get usually is lower volume. And you notice today, really the last 3 days in a row have been lower volume. It's kind of convenient, but you see this dashed line over the volume. That's not intended to be on volume. But if you look at where that line is, the vast majority of candles are above it. And today we're down below it, and the trend over the last 3 days has been down below. So, this is usual before a Fed announcement. It's just kind of like nobody wants to pick a direction. It's just too much gambling to say what the impact is. I think everyone agrees we're going to see a rate cut. I'm pretty solid on that one. It's going to be a rate cut. But what happens? How does the market digest that or react to it? Instinctively, you would think that the markets would have a nice little rally here because, all right, we got another juice to the system if he does, in fact, put the pedal to the metal, if you will, and cut rates more. But is the market unhappy with 25 basis points? Does the market react poorly to what Jerome Powell says during the press conference? All that stuff is just too much uncertainty. If you're a gambler, well, pick a direction, load the boat, and go for it. But most of you are not gamblers. We're speculators that are trying to go with high probability. And I would argue that there is no real high probability of which way this market's going to go. On a normal day, tomorrow I'd be looking to short on a normal day because it feels like momentum is just starting to get a little bit weaker. It feels like overhead supply is held here on the S&P, and I would think that we'd start to see a little bit of a sell-off. But it's not a normal day tomorrow. Let's see. Louis says he's not going to be around, so would it really matter? Well, it does matter. I mean, obviously there's a legacy piece here involved. And, I don't sound dramatic, but the fate of the U.S. economy is at stake. Well, it's maybe not that dramatic, but, these rate cuts and hikes have a significant impact on people's day-to-day lives. It's going to have an impact on money, on spending, on demand, on supply, on employment, on expansion. I mean, all that stuff, lending, all of it gets impacted. So, yeah, it is a pretty big piece. Even though he's leaving, he's still got to care. Would the markets freaked out if they surprised us with a 50 basis point cut? Yeah, I think the markets would rip. I think you'd see a huge move up. We'd be at all-time highs probably by the end of the day. I like to look at things I like to look at the cup half full perspective first, Oliver. And second, I look at the cup half empty, right? You got to look at it from the bullish side and the bearish side. If for some reason, hypothetically, they came out tomorrow and said we're cutting 50 basis points, markets are going to rejoice because that short end of the yield curve means money's going to start flooding into the equity markets. Money's going to start flooding into the markets, period. When you take a step back and look at the cup half empty, that would mean that the Fed sees something ahead that is just very concerning. And as we know, the Fed is generally late to the party. So if the Fed's going to cut 50 basis points, Dan, and surprise us, apologize for the bad French, it'd be an oh shit moment. It'd be like one of those, oh shoot, oh boy, what did we miss? And what could that be, right? It's not the unemployment numbers, unless they're cooking the data and we haven't seen the actual numbers, and that could be right? That could be. But let's just go out here and look at some of the data to back this up. Let me get rid of all of, let's get none. We'll throw only the U.S. We'll get rid of speeches and business surveys and consumer surveys. Okay, and bonds. All right, so I'll apply the filter to the U.S. equity markets. What types of things would be bad for the market? Let's go just look at overall trends. Now, I didn't mention this one. I did mention this one back in October. I'm already way back in October. Let's go back forward here and get to, let's go to the most recent stuff here. So last week. Jobs. This is concerning. If you look at the ADP non-farm employment change we talked about, and maybe I should update my spreadsheet, my little grid that I did. This is very bad. You guys know my mantra, the trend is your friend until the bend at the end. I wish it was shorter because that would actually be... I'd make that the show slogan. Trader Merlin, the trend is your friend until the bend at the end, but it's just too long. But notice what's been happening. I mean, it seems like every month that little gold dash, which is market expectations, gets lower and lower and lower and lower, and now we're negative. And we're negative for the third time in 6 months. That is really bad for ADP non-farm employment change. We should not see that type of negative stuff. Well, what about factory orders, right? Factory orders will tell you about business expansion. Well, this one's obviously very volatile, but the last couple of readings have been very low. I'm not too concerned about that. So that's one. Let's go look at the core PCE price index. I'm not worried about this at all. It feels, and I hate to say it, I sound like a politician, it feels like unemployment is inflation is under control. Now, I believe that's going to change in 2026. I'm going to just be clear about that. I think that's going to change in 2026 because of the rate cuts. I think it's going to kind of start to creep, not dramatically, but I do think that we'll probably get up some point next year to 0.4, 0.3 on the core PCE price index. That would be bad, right? That means that the Fed's going to have to start to raise rates, and that could choke out the economy. So that could be a bad piece. What else do I have here? Let's go back to the week before for major pieces. Your producer price index. Okay, this one's been very choppy, but Blue Diesel says, is it all manipulated? As someone who's been in this for a long time, manipulated, yes. I think so. I don't know what to believe. Unless, and this goes back to just my attitude as a human. Unless I see something with my own two eyes actually really happen, I don't know if I believe it. And this should be something that's abundantly clear for everybody here looking at the stuff online. If you look online and go to Instagram or TikTok or whatever, YouTube Shorts, I'm watching this great friend send it to me because he knows I've got a German Shepherd and I love German Shepherds. So I've got this video sent to me of a German Shepherd opening the front door. And there's a postman at the front door. And you're like, oh, okay, where's this going to be some kind of funny video? And all of a sudden, the German Shepherd jumps on his back two legs, pulls out an M16, just starts shooting up the mailman. I'm like, it's all AI. I don't know what I'm looking at. So they are man's best friend. Absolutely, Rob. So I don't believe the data, but I have to go with what I'm given, right? I do believe that the data is cooked. I interviewed a guy on Power Trading Radio years ago. John O'Donnell brought him on. It wasn't Peter J. Wallace, and it was somebody else, but he worked for the Bureau of Labor Statistics, and I asked him point blank. I literally asked him and said, do you guys manipulate the data? And he said, yes, we do. I'm like, I did not expect you to give me that blunt of an answer. But he said that political agendas will require the modification and tweaking of said data to benefit that specific party. And from then on, I've never believed the data that comes out. But I have to use it as a guideline for the overall markets because people are reacting to that data. So there we go. What did Big Eb say? I've been feeling this thing since 2022. PC looks good, but anyone who is shopping still feels a sting in the pocketbook. Yeah. It's funny. Those that know me well, that when I see a deal, I will usually take advantage of that deal. I literally went and bought a coffin freezer for my garage. And meat prices have been so unbelievably volatile. Right now, a Butterball turkey at the store is $2.99 a pound. $2.99 a pound. But during Thanksgiving, that same Butterball turkey was 27 cents a pound. That's 90% discount. So can you guess who loaded up on frozen turkeys? This guy. Usually boneless, skinless chicken breasts around here about $3.99 a pound. They just went on sale this week for $1.99 a pound. So I am loading the boat on boneless, skinless chicken breast because I got to work on a bulk up phase here for my my fitness thing. So I got a freezer for all that stuff. Did you load up on steaks? No, not steaks, Ollie. For my diet, I need more protein, so I'm more chicken. So I'm definitely loading up on chicken. Yeah. But the point is, when you see things at a discount, you load up, and it just goes to show the frugal nature of myself. Not that I'm being cheap, but I know that if I'm getting a great deal, and I know I'm going to eat something or utilize something, I'm going to load up on that bad boy. And I think the market should be no different than that. No different there. Turkey is, pumped with all kinds of stuff. We just don't know exactly what they're doing in there. So I definitely take chicken over turkey. But for 27 cents a pound for 20-pound turkeys, are you kidding me? I mean, I did for Thanksgiving. I cooked a 27-pound turkey. I got almost 7 pounds of meat once it was all said and done, stripped and everything. That's once it thaws out and all the frozen stuff comes out. But yeah, basically $5. Let's see. Yeah, $5 at 27 cents a pound for a 20-pound bird. $5 for almost 7 pounds worth of turkey. That's not a bad deal. Let's see. What do you got there? Turkey. Damn. We're getting there, Big M. I got a lot more work to do. I got a lot more work to do. And Andy is, as you say here, his wallet speaks louder. John O'Donnell, who I've been trying to get back on the program for you guys, just because he's just a good friend of mine. He said the cure for a high price is a higher price. And when I first heard him say that, I was like, man, that's kind of a whatever. I don't know if I necessarily believe that, but it's true, right? We can all voice our opinions, our acceptance or disapproval on a price of any goods and service by not going. For example, I've always used the example of the Habit Burger. I love Habit Burger. It's so good. However, when they went from $8 for a Habit combo to $16 for a Habit combo, I just stopped eating them. And plus, it's a lot of fats and grease I just don't need in my diet anyway, so I'm healthier for it. But yeah, don't buy stuff, and the price will come back down. I wonder what's the stock price on beer. You can get some really good deals. If you just look at the ads, every week, these grocery stores will do some crazy ad on something. Modelo is usually my go-to beer just because it's light and easy to drink. I find that stuff sometimes at 30-40% off on ad. Dan says, harvested my own turkey 2 years ago. They were delicious, but I won't do it again. Best way to go, Dan, is to raise and harvest your own. Here's the problem. And I'm sure you went through this, Dan. When you harvest your own turkey, you have the whole cleaning process of preparing that bird. And one thing that people just don't talk about enough is how difficult it is to pull feathers out of a bird. I remember as a kid, my parents had chickens. We harvested a chicken. We ate that chicken, but it was an absolute nightmare. I'm traumatized because of it, the way we had to kill the chicken. But I had to pull all the feathers, and man, what a nightmare. I will go pay my $1.99 a pound for boneless, skinless chicken breast and call it a day. But certain things, yeah. My vegetables, I'm fine to grow. Much easier to clean and prepare a carrot than it is a turkey. Big Ed's a good beer. It's hard to find on sale. That's true. Craft beer is definitely hard to find. All right, we're off topic. We're off trail. We're looking at data, trying to find out what could possibly cause a 50 basis point cut. Durable goods orders. These are orders for washing machines, and big heavy equipment. This stuff is extremely volatile. This, in my opinion, is tariff driven, so I'm not too concerned about that right now. All in all, I don't see anything here that looks apocalyptic. This is another one that I think could hurt us in the long run. This goes back to the trend. This one's tough, right? This is the S&P Case-Shiller Composite 20 Home Price Index. This measures the price of home appreciation in 20 major metropolitan areas of the United States. This chart, I'll be honest, it does concern me. And you notice why. We peaked out here in May of 2024, and now it's been making lower highs, lower lows. It does look like it's poised for a little bit of a bounce up here, and maybe that will happen if rates drop. But the 10-year, here's your 10-year yield. The 10-year has been surging. I mean, the 10-year was under 4% on Friday of last week, and now we're almost at 4.2%. That change will have a significant impact on the 30-year fixed-rate mortgage going forward. And if that does continue on, you're going to see less home buying, which would push price appreciation even further lower, and maybe we get sub-zero, which means a price contraction in appreciation value. So not good. As a homeowner, if you signed your 30-year fixed-rate mortgage, you would love this number to stay above whatever your mortgage rate is. Right now, it's below. because most people here are around that 3% mark, yet the S&P Case-Shiller Composite 20 Home Price Index is only 1.4. Meaning, if you got a 3% mortgage and your house is appreciated by 1.4%, then you lost 1.6% technically on the value of your house. Even though the value is going up, it's not going up as much as your mortgage you paid in interest. So we want to see these numbers turn around. If this does drop lower and lower and lower, it could start to put people underwater on their mortgages and put more pressure on it. This for me is one of the more important ones right now to keep an eye on, which I don't think a lot of people are talking about. It's just price appreciation. And put yourself in the shoes of an investor. Yes, you want to buy a house, but housing prices right now are typically relatively high. You want to buy in an environment where the mortgage rates are going up and prices are high. If you look at this chart here, you'd go, I don't know if now's a good time to buy because prices are not appreciating. Maybe we want to see a washout, see those prices decline. I mean, the chart I'm looking at now goes all the way back into 2007. Obviously, we had that monster sell-off there in 2007 and 8 and 9 before we shot back up because of the government's money injection into everything. But we haven't really had a prolonged sell-off. We had a little bit sell-off here in 2023 of price contraction. And yeah, it feels like we're headed towards zero and possibly negative prices. So hold off on buying the house. Maybe prices will start to come down a little bit. But again, this could put people underwater and start to hurt the markets from an economic perspective. So as Andres says, no bueno. Exactly. All right. Man, we went down a lot of different paths today, and I realize it's getting close to the end of the show. So let me go back through because I didn't make it all the way to the top. We had stopped on the 10. We didn't get to the Russell. The Russell's an interesting one. Look at the top last 4 days on the Russell. I love the chart of the Russell. I love that it's real strong. But those last 4 days, if you guys look at the last 4 days worth of trading, so let's just do a little bit. I'll zoom in here. Last 4 days worth of trading, which are these bad boys right here. What does that tell you about what's going on? You guys tell me. What does that say about the behavior of buyers and sellers? Would you, if you had to pick one that you think is winning here, is it the buyers or the sellers? And because there's a long delay, I'll just start talking. But for me, after those two huge green candles on the Russell, which was December 3rd and December 4th, big, giant green candles, it feels to me like the sellers are starting to step in more aggressively. Look at the topping tails. Every day, this has been a big green candle. At some point, this was a green candle. But for some reason, by the end of it, prices are closing in the lower end of its range. At least the last 3 days have been really clear. So while it's not like the sky is falling, it is a clue that the sellers are actually winning this battle. Even though today was a green candle, the long topping tail tells you that, the sellers came back in and pushed it down. It still finished up on the day, but the sellers had the last word on the Russell today. So this has me a little, concern's not the right word. Again, it's just opportunity. I still think that this line that you see here today at 2,518, we could probably modify it to fit the low of today because it did, let me put it on there, get below the low of today, which was slightly lower, 2,516. All right, if we get below that, I think you got a good shorting opportunity, and it does feel like it's setting up that way because those long topping tails on the Russell 2000. So there you go. All right, we looked at the 10-year, which is screaming towards 1.2%. Which I've had that line drawn in the screen. Remember, a close above 4.2% is the peak from all the way back in September. After that, I think we really start to see some more moves up. And again, the next logical stop is about 1.25, which isn't really that far away. 4.25, excuse me. We already talked about gold extensively. It does feel like things are looking decent for gold. Starting to form that base. And again, if the dollar does get dropped, which it should tomorrow, we should see gold pop and probably get above this little diagonal line on the top. And then finally, Bitcoin up 2.58%. Interesting move for Bitcoin today. Yes, it has been making higher lows. And today it actually made a higher high, but didn't close in that higher high stat. So all in all, a decent day for Bitcoin up 2.58%. It helps for my MicroStrategy put position because I sold puts on that one at 160. So I should be good by Friday. And I did not sell any calls on my Amazon. I didn't even see what Amazon finished at. Okay, slight update for Amazon. Not that big of a deal. I still am holding a bunch of Amazon, as you guys know. So there we go. Rob says, if we cannot break the highs, it will drop. Yeah, you're talking about the Russell. not necessarily the highs. I feel like we're stuck in this really small little box on the Russell. Let's go here to here, and I'll draw that. I feel like we're stuck in this little yellow box right now on the Russell. And that box, for those who want the exact numbers, that box looks like it's between 2,545 and 2,516.6. So really, play it either way, right? This is where trading becomes very simple. You say if it breaks down below that yellow box, you got a short opportunity, go for it. If it stays within it, look, spread trade that thing. Or if it breaks above that yellow box, you got yourself a long position as we rush towards all-time highs. Make it simple and easy. Okay, let me go back to your economic calendar so I can just show you what's happening for tomorrow, because there is stuff happening. Let's go forward to Wednesday, December 10th. Of course, all eyes on the central bank for the U.S., but that's not the first announcement. At 9:45 in the morning Eastern time, we do have a rate statement coming out for the Bank of Canada. They're expected to stay at 2.25%. You do have employment costs for the U.S. You have crude oil inventories coming out for the U.S. You have a press conference at 2:30, and of course the rate announcement at 2 p.m. Eastern time. That is it for your major economic announcements. And let me go in here and look at, I didn't bring up the earnings calendar yet. My bad. I'm slacking out here today. If you look at the earnings calendar for Wednesday, there weren't a lot of big names this week, but there are a couple on Wednesday that you might want to pay attention to. So Adobe is your big one for, let me get the market cap here. Oh yeah, Oracle. I don't know why I didn't think of that one. You have Oracle, you have Adobe, you have BYD Motors, you have an ad in the middle of your screen, which I can't get rid of. Apologize for that. I don't know why I can't get rid of that thing, but unfortunately there's an ad there. BYD Motors, Adobe, Synopsys, which of course just did a real big deal with NVIDIA, and that's pretty much it. Chewy. I do support Chewy. I get dog food sent to me every month from Chewy. So that's pretty much it for your Wednesday session. We're going to have Bill Addis on the program tomorrow, so if you guys have questions for Bill or anything to do with bonds, let me know. Tomorrow will be the day to have those questions answered with Bill Addis, the king of bonds. Love having him on the program. So thank you guys so much. Hope you enjoyed today's show. If you are new, as I saw some new names out there, email me out at tradermerlin@gmail.com if you have questions, comments, feedback. For those who send in questions, Alex, thank you very much for the silver question, and hopefully I answered your questions for you and gave you a little bit more food for thought. That said, thanks everybody. Have a fantastic remainder of your day, and I will see you mañana.